business 30 years. I basically only do reverse mortgages anymore. And a couple things about that I'll share with you is that they've been around for 30 years. They did not have a good reputation. I stayed away from them for 20, 25 years. And when you take a look at them, 2013, after our meltdown, HUD, who is Housing and Urban Development, federal government, they came in. They're the godfather that writes the rules. FHA insures it. And they got together and said, you know, the senior homeowners protected class, we need to make changes. And they have. Beginning in 2013 through last year, they've made changes. All of those changes are for the betterment and security of the senior homeowners to protect them. And it's truly a fantastic loan. Now, most of us, when we get a mortgage, we say, you know, what's the lowest rate and how quickly can we close? And that's fine in your traditional mortgage. That's what you want. However, on a reverse mortgage, the lowest interest rate may not be your best option. Even though today we're at historic low rates, that's great. But, you know, if I could say instead of a reverse mortgage or a Heckum home equity conversion mortgage, let's call it a retirement mortgage and see the paradigm shift in that. And the reason I say that, there's some statistics that, well, it's nice when people have money and they have the strategy and they have the planning and they've go talk to Sally years ago and they've got their retirement in place. The sad fact is most people don't. The majority don't. In fact, 30% of people over 65 in the US have $1,000 or less saved. Something like the average or the median 401k plan has like $15,000 in it. That's it. And there's over, I don't know the most recent, but there's over 6 trillion with a T, $6 trillion locked up in home equity. In Social Security, I read this directly from Social Security Administration. The Social Security should be 40% of your retirement income. So if you have less than $15,000 saved or $1,000 saved, and you're no longer working and you're getting 40% of your income, what's happening is you've got the majority of your assets tied up in your home. And there's over 10,000 people a day turning 65 in the US. That will happen for another 9 years. And we've got also what's called the great or the silent generation. And those are people 75 and older that I have 2 widows that I can think of that were 90 years old that I did a reverse mortgage with last year to provide additional income. Another lady comes to mind that had $50,000 of in-home healthcare needs last year and got a reverse mortgage to help with that. So I always say, when's the best time to borrow money? It's when you don't need it. And so to couple with, you know, Sally in the planning, I'm not a financial planner, but inside of a reverse mortgage space, what's so critically important is planning. And it's like the reverse mortgage, what it does is it takes, based on the interest rate, value of your home, and your age, it takes a percentage of your equity and converts it to cash, tax-free cash, I might add. So if that's the case, the first thing it does is pays off your existing first mortgage if you have one. Well, I had a couple that I recently closed and his Social Security check was just over $1,200 a month. Their mortgage payment was just over $1,100 a month. And then her Social Security was just under $600 a month. So his Social Security check was paying the mortgage. Her Social Security check they were living on, causing them to have food stamps and cut coupons like banshees. When we closed, I got rid of the mortgage payment and gave them a $27,000 check. It literally was like them hitting the lottery. They are completely debt-free and there's money in the bank and it's a happy ending. So it's like, how can I meet with people? And the biggest thing I do today is educate people. And by the way, I'd like to offer, I wrote a book on reverse mortgages because when I got interested in reverse mortgages, After 25 years, I became horrifically frustrated at trying to find out what they are, how to sell them, how to market them, how to talk to people. And so out of that, the lemonade out of that was that I made out of the lemon, I guess, is that I wrote a book. It's in its second edition. If you know of anybody that would like one, or if you would like one, complimentary, just let me know. Drop me a note and I'll get you a copy for free. I was blessed 2 years ago. If you remember Bob Massey, who was the property man on Fox TV, we did an event together at a resort in Scottsdale, Orange Tree Resort, and he endorsed my book. So I've got his endorsement on my cover now, which was in part why I made the second edition. Another thing, as I said earlier, Facebook, largest growing demographic, but something else the seniors are doing. The largest demographic of divorces happens to be the seniors. And so you can utilize a reverse mortgage to purchase a home. You can use a reverse mortgage to settle a divorce, sadly. But that's, so many of the spouses haven't worked. So it's like if you're left with a couple splitting and there's the house, and by the way, reverse mortgages, you don't qualify for them the same way you do a traditional mortgage. They're not credit score driven. There's other factors that are not the same. So it's really, it's not a commodity. It's like a planning tool. And how can a person take the equity in their home, convert it to tax-free cash, and in doing so, yeah, you've got to pay off that first mortgage. Well, this example I just gave, I gave that couple about a $900 a month increase in their income because they don't have a principal and interest payment anymore. That's huge in the world. And I have another gentleman I'm working with. It's like a $250,000 home, and converting that into cash, not that he needs it, but that it's available to him. And one of the biggest features of a reverse mortgage is its line of credit. So you can make available through a reverse mortgage a line of credit, and once that loan closes, that line of credit's available. And then a couple things. Number one, that can never be canceled, never. And so, yes, how much you get for a line of credit's determined when you close, but the minute you close, they uncouple that. And from that point forward, that line of credit contractually grows every year, regardless of the value of the home. So how about having 50, 100, 200, 250? I have a couple in Sedona in their 60s that took it out, $500,000 home, and they have just had $500,000 or $250,000 available in a line of credit just because. And it's growing at over 3% a year. And it's not like if I invest my money with Sally, I get a rate of return. How it works is you take that $250,000, and then next year, regardless of the value of your home, it's going to be worth, you're going to get 3% more. Next year after that, 3% more. So contractually, it's always growing. So when you think about that, 91% of the people in the United States want to age in place. I want to live in my home until I drop. And hopefully we're all lucky enough to do that. But that takes a lot of times, that takes money. It takes money to remodel the home. Maybe one of the walk-in bathtubs, maybe one of those chairs that you sit at the stairs and it'll take you upstairs. Maybe ramps. There's a lot of things that you may have to do to your home to be able to age in place. Or in-home health care, which is far less expensive than living in assisted living. But could you take your reverse mortgage and set it up so that in the future you can pay for in-home health care and save money because you're not going into an assisted living place? And that's all, that money's already established for you because you've got your line of credit with your reverse mortgage, and nobody can take it away from you.
Jim, what's the average cost of a Heckum?
Well, it varies. And one of the biggest aspects about that, it's federally insured. So the biggest hurdle oftentimes is 2% of the value of the home is the upfront mortgage insurance premium at closing. So $300,000 home, that's $6,000. And that goes to FHA. It's a federally mandated thing. And then besides that, there may be an origination fee, which is capped based on value of the home, which 6,000 is the maximum. And then just the rest I get to blame on Debbie. It's like escrow and title makes up most of the other fees, you know? So basically the other fees are associated with like a conventional mortgage, Susan. So
Jim, eventually somebody has to pay that back. Eventually, they're not giving you that money like a PPP loan where you never have to pay it back. So how does that work?
great point. So it's like there's no free lunch. So what's happening is your loan balance, the interest is accruing. So I owe more tomorrow than I do today. So there's two paths that can go down. The environment we've been in for the last 10 years or so is, if you think about it, the interest accruing on the loan at say 3% versus the appreciation of the home, say 4 or 5%. If I wake up a year, 5, 10, I take this out to age 99, there is more equity if the person sells their home or is no longer in their home. There's more equity in the future for them than there is today. But conversely, it's a federally insured mortgage. So if we have a 2008 comes back to bite us, and all of a sudden your loan is upside down and you've established that line of credit continues to grow, and that money is still available and it's federally insured. So if you die and you owe $100,000 more than the home is worth, send them the keys. It's called non-recourse. If you had $1 million, $10 million, or a dime in the bank, the lender cannot come into your estate for a dime. It's federally insured. That's why you pay the mortgage insurance.
I had my mom do that last year. She was living like $100 a month, you know, after a car payment, bills, mortgage, and I got her back in Indiana to meet with a reverse mortgage person that did that, and best thing is she's ever happened. Now she's like has $600-800 extra a month.
There you go. And the thing, if she's had it a year, I'm not licensed in Indiana, please have her look into refinancing it.
Okay.
Okay. Because if you think about it, she's probably about 5% and you're about 3%. Let's do an easy math. If you're $100,000 and it's 2% less, that's $2,000 less of accrued interest or less loan balance if she refinances it. And there's guidelines around that. So yeah, you just can't wake up and say, I want to do it. You have to meet some specific guidelines that HUD sets out.
Tim, I'm glad that you brought that up, because I've worked with clients before, and a reverse mortgage has really just, it's been the answer. The hard thing is sometimes is the hurdle of the reputation of a reverse mortgage. And a lot of people, I think sometimes what helps, and I don't obviously sell the reverse mortgages, I just work with people on their, you know, financial plans. But I think the thing that people get caught up with is it's a mortgage. It's a reverse mortgage. So a lot of people think, well, man, if I die, then the bank has my house. Well, I think if 2008 taught us anything, it's that we all know now that banks don't really want houses, right? But if I died with a mortgage, what would happen?
Same
right
thing.
my house would have a debt on it. My estate needs to pay off that debt or just to hand the house over. It's the same thing on a reverse. I think, Thomas, sometimes that helps when I'm talking to some people about it, is you have a debt. If you die, there's a debt. How is that debt going to be settled? The house is worth $200,000 and I owe $100,000. Well, my estate is obviously going to sell the house and give the $100,000 back to the bank so they can walk away with the extra 100. But I think more than anything, it creates the peace of mind. And the one thing that I will say is that it's really important when you have in my experience with people that I have worked with, when it comes to a reverse mortgage, it, for some reason, is very confusing to most people. And it's really important to be working with somebody who really specializes in reverse mortgages.
Oh my God, thank you
have had
so much for
experience-
saying that, Sally.
yeah, having people, I have had experience with mortgage brokers who don't specialize in reverse mortgages taking on the reverse mortgage, and it's just a night and day difference. I really think that if you go with somebody who really specializes in reverse mortgages, and Susan, I think she's dead on with that. She knew the moment that Jim was a guest that it was kind of like, you know, I welcome that opportunity because they are different aspects.
Yeah, it took a
Thank
while
you
to
too,
find
Susan.
someone in my mom's area that does that. You know, we've interviewed several different lenders and people that say they did it, but one lady we got, and she was fabulous with my mom. We paid off my mom's car. My dad passed 5 years ago, so the pension was gone. So my mom was just living on Social Security, and that was it. So that she was like literally down to $50 a month with no money, you know. So after we did the reverse mortgage, she's like a load off of her head, you know. It's no car payment now. You know, her mortgage is really, really low. So it worked out really good for her.
Happy ending. Glad to hear that always.
How long
I
does
guess
it
I
typically
came
take
from
to
the
go
old
through the
school.
process?
Right
Long
now,
time. For my mom, it was a long time. I
Oh,
don't remember how long, but to me, it seemed like a lot of red tape that we had to go through. She always filling out forms, getting extra stuff. It was for her a lot of work, but it was well worth it.
I'm saying 60 days right now, only because everybody's still kind of working remote. And this is the first time that the refinance aspect has been a viable stream of business. And so our company did more reverse mortgages last month than any 2 months combined and they're the #2 lender in California in the top 10 in the United States with reverse mortgages. So our business is very, you know, it's a capacity issue right now.
okay. Well, I'm just looking at that as from the standpoint of a lot of our people end up applying for Arizona long-term care
Mhm.
to try to help pay for their care, and that might be a viable option for them because a lot of them still do own houses or trying to do that instead of, because Altex is typically a 6 to 8 week process anyways. So that might be and you know, even longer now
Yeah.
with COVID. So that might be a viable option for them also. Okay.
And a lot of times, the one Arizona makes you spend your money down to like $2,000 in assets. That's all you can have.
They do,
So,
but sometimes there's an option when they have a house to
yeah.
do some other things. So,
But instead of doing that, it's like they may do a reverse mortgage. I mean, they're spending it down to nothing anyway, but that may be a viable option. And by the way, I love all of your comments and inputs and questions, and I always welcome collaboration. You know, if it's working with Tim's case, if it's working with a child, if it's working with a financial advisor, an attorney, if it's working with a friend, you know, let's just, the only caveat I have with that is as long as people are open to learn, because first and foremost for me, it's education. And it's really about that senior homeowner having peace of mind and quality of life. That's what it comes down to. As Tim, you just attested with your mom, you know, it's like you're elderly now, you've lost your spouse, and guess what? I can relax because that stress is gone. That's why I do what I do.
I have a quick question. I don't know if this is a dumb question or not, but if the house is paid off, because a lot of the scenarios that people have been talking about today have included they pay their house off or whatever. Well, what if the house is paid off? What does that look like? It's the same scenario pretty much. You're just not paying off the
Then they
house.
get cash, but the question becomes, do they want a monthly income? I can set it up so they have a monthly income. I can set it up so they can have their taxes and insurance paid for the rest of their life. I could set it up so they can get a lump sum and have taxes and insurance paid. Or I can just set it up that they can have a lump sum and then they take care of it.
Okay, so
there's
it just,
many
just
different
depends on the
options.
scenario.
Yeah. Well, and that's an interesting point too, because what it comes down to, it's like, what do you want? Here's your options. It's not like that's what you have to do. It's like, here's your options, and the right answer is the one that you're comfortable with. So it's,
You know,
great
I'm going to
question.
tag on, if you don't mind, a little bit, because, I've got a case right now that I have a client that is 76 years old, and she came to me probably, she was a referral to me maybe a month or so ago, and she's worried that she's going to run out of money. And as I look at her finances, the problem of her running out of money is all herself, right? It's all in her head. It's not the actual case.